Okay, people, listen to me. We need to talk about depositories. What is a stock market depository? It sounds complicated, I know, but it is not. Think of it like a very special bank, a super secure vault for your investments. It holds your shares, your bonds electronically, not physical paper. This is key. It keeps everything organized and safe. You must understand this. Why are depositories so important? I will tell you, they are the backbone of the modern stock market. Without them, trading would be a nightmare. A slow, messy, risky nightmare. Imagine piles of paper share certificates. Lost, stolen, damaged. No thank you. Depositories make sure your ownership is recorded, accurately, securely. This gives you peace of mind, and that is priceless. Let me give you an example. It's like your savings account at a bank. Your bank holds your money safely, right? A depository does the same for your stocks. When you buy shares of, say, Apple or Microsoft, you don't get a fancy paper certificate anymore. Instead, those shares are credited to your account. Your electronic account held securely within the depository system. This is called dematerialization, a big word for a simple, smart idea. Think about the old days. Before depositories became common, it was all paper. Physical share certificates, buying and selling was slow, so much paperwork, so many risks. A certificate could get lost in the mail, it could be forged, it could be destroyed in a fire. This created huge problems for investors, big headaches. Depositories changed all of that. Thank goodness they did. They brought safety and efficiency. So, what exactly do these depositories do all day? Their main job is holding your securities, in electronic form, safe and sound. This is their number one function. They act as a central record keeper for all those shares and bonds, millions and millions of them, all tracked digitally, no more paper shuffling. This is a huge responsibility, and they take it very seriously. Another key function is making transfers easy. When you buy or sell shares, what happens? The depository makes sure the shares move, from the seller's account to the buyer's account, smoothly, quickly, efficiently. Without this, trading would grind to a halt. Imagine waiting weeks for your shares. That's how it used to be. Depositories make it happen in days. Or even faster now. This is progress, people. Depositories also handle corporate actions. What are those? Things like dividends, or bonus shares, or stock splits. When a company you invested in pays a dividend, the depository helps distribute it to the rightful owners. To you, it ensures you get what you are entitled to, automatically, into your account. No chasing paperwork, no missed payments. This is very convenient for you. Let's talk a little history. Depositories didn't just appear overnight. It was an evolution, driven by need. As stock markets grew, the paper problem got worse. Trading volumes exploded. The old system couldn't cope. It was creaking, it was breaking. So the idea of centralizing and digitizing share ownership was born. Germany had one of the first systems. Then other countries followed. It was a global shift towards a better way, a smarter way. All right, let's talk benefits. For you, the investor, this is what really matters. The biggest benefit is safety. Your investments are secure, held in electronic form. No more worrying about losing physical certificates. No more risk of theft or damage. Your ownership is recorded digitally, protected by strong security measures. This is a huge weight off your shoulders. You can sleep better at night. Then there's speed and efficiency. Oh, this is a big one. Because of depositories, buying and selling shares is fast, super fast. Settlements happen quickly, usually within a couple of days. This means your money isn't tied up for long, and your shares are in your account promptly. This efficiency makes the whole market work better, for everyone. It allows you to react quickly to market changes. Think about buying shares in a company you believe in. Let's say you want to invest in a new tech company, or a solid blue-chip stock. You place your order with your broker. Behind the scenes, the depository system kicks in. It ensures that when your trade is executed, the shares are correctly transferred to your account. Without you having to handle any paper, it is seamless. This is the depository working for you every single day. And one more thing, it makes managing your portfolio so much easier. All your holdings are in one place, electronically. You can see what you own at any time through your Demat account statement. This helps you track your investments, make informed decisions, rebalance your portfolio. It simplifies your financial life. No more shoeboxes full of old certificates, just clear, concise digital records. This is empowering. Now you might hear another term, custodian. Is a custodian the same as a depository? No, they are different, but they work together. A depository is the main institution, the big cheese. It holds all the securities at the top level, A custodian, on the other hand, often acts as an intermediary. They might hold securities on behalf of their clients, often big clients like banks or fund managers. They use the depository's services. Think of it this way. The depository is like the central bank for securities, and you as an individual investor, you usually interact with a depository participant or DP. Your broker is often a DP. The DP maintains your account, and that DP is a member of the main depository. So the depository is the ultimate record keeper. The custodian or DP is your access point to that system. This structure provides layers of security. Why is it important to understand all this? Because this is about your money, your hard-earned money, your investments. Knowing how the system works gives you confidence. It helps you understand where your assets are, how they are being protected. It demystifies the process. You are not just blindly trusting, you are an informed investor. And an informed investor is a smarter investor, always. So to wrap this up, depositories are crucial, absolutely essential. They make the stock market safer, faster, more efficient. For you, for me, for everyone. Understanding their role helps you appreciate the security behind your investments. It's not just numbers on a screen, there's a robust system ensuring it's all real and all yours. So, get smart about depositories. It's part of being a responsible, empowered investor. You got this.